gentlemen, hosting our next panel on the future of the American dream for the next generation, our Millennial panel, please welcome from the Young America's Foundation, Jiesi Zhao.
Thank you. Good afternoon. It is such a privilege to be here with you all in Jackson Hole, and it is my honor and privilege to serve as Director of Young America's Foundation's Center for Entrepreneurship and Free Enterprise. Young America's Foundation is the premier youth outreach organization in the conservative movement today through our breakthrough on-campus lectures throughout the country and our immersive seminars and conferences held in the DC area and at our West Coast office in Santa Barbara, California, where we also own and preserve Ronald Reagan's ranch. We actually have several YAFers, young students with us here today, so please don't hesitate to ask Lauren, Michelle, and Julian about their experiences as students at our programs. As someone who works with millennials on a daily basis, I can tell you that this generation is looking for alternatives to the actions of the left, especially that we've seen in the last several years, that display a total lack of understanding of basic economic principles. And with me here today is a very accomplished group of young panelists who are here to share with us how the Fed and how monetary policy affects millennials. We have with us here today Ms. Julie Borowski. Julie is a political commentator who is living in the DC area. She is best known for her YouTube channel where her videos have over 6 million views. We also have with us Jared Meyer. Jared is a fellow at the Manhattan Institute for Policy Research. He is the co-author, along with Diana Furchtgott-Roth, of the book Disinherited: How Washington is Betraying America's Young. And finally, we have Johanness Schmidt. Johanness is the editor of the Atlas Network's Sound Money Project, and one of his claims to fame is that he has worked under some of the original Chicago boys in Santiago, Chile. I think we can all say that these panelists are rockstar millennials. So let's dive right in. Jared, why don't we start with you? How has the actions of the Fed in recent years affected millennials, and perhaps how has their actions affected millennials differently than the rest of the population?
Well, I think the subject of my book was how government policy tends to favor older Americans at the expense of millennials, and this is a systematic problem. And in monetary policy too, older Americans are being favored and the government's playing favorites, but the young are again the losers. If we look at the decrease in mortgage interest rates or the increase in equities, these are not going to young people. It's not benefiting them proportionally. And also increased political influence on the Federal Reserve endangers long-term growth. So first, starting off with home ownership. I mean, young people don't own homes. Right now it's at the lowest level since the Census Bureau began tracking it in 1982, and it's only 35% of people under 35 own a house. So the Fed-fueled increase, which has led to lower mortgage rates and the ability for people to refinance their homes, what this has done is benefited upper middle class, middle-aged households, and again, young people have missed out on this. But another asset class that has seen increased value because of the Fed's policies are equities. But young people, less than a third of people under 35 have any retirement savings at all. So even as investors have moved into the stock market to try to chase higher returns, the benefits there haven't really went to young people. But it's not just that, again, that these things are missing out, but this is a tendency of government in general, where the Fed is now in the position to pick winners and losers, and young people who tend not to be as politically engaged and not really on the radar of, if you've seen a picture of the FOMC, there's not really much young blood going on there, but they're not really on what the Federal Reserve is looking out for. But to correct this, we don't need the Federal Reserve to keep swaying every time a new employment report comes out and basing their policies off that. What we instead need is a consistent, predetermined rule for the Federal Reserve to follow. And the reason this would be so important is it would help to insulate the Federal Reserve from political pressures. This is why politicians don't like a predetermined rule, because then they can't push monetary policymakers to do things to, let's say, bump short-term unemployment, even if it puts long-term price stability at risk. And the increased political influence on the Federal Reserve doesn't stop at employment targeting. If we look at all the mergers that were going on before the financial crisis, the Fed was signing off on them, even though a lot of them were blatant political bargains between mega banks and activist groups. But the Fed, because they didn't want to make members of Congress angry, decided to just rubber stamp all these mergers, and give the markets their seal of approval. But again, even when government agencies fail or fail to get the outcomes they're pushing for, they end up getting more and more authority and more power brought onto them. And the Federal Reserve fits in this vicious cycle as well. If we look at Dodd-Frank, now the Federal Reserve can regulate even more financial institutions, even ones that really aren't banks at all. So right now, what we need to do when we're looking at how monetary policy affects young people is we have to look at, instead of expanding the Fed's reach into the economy, we need to look at how the Federal Reserve can step off and we can get other forms of economic growth, and how people can, instead of relying on the Fed, which has been there's been too much political influence on it, and it's favored older Americans, we need to step back and look at really what the point of the Federal Reserve is.
Thank you, Jared. There's a lot that we want to parse through, but first, let's go to Johanness. What position should millennials take on monetary policy?
So at this point, I think any position would be a good position for millennials to take on monetary policy. Unfortunately, we see in Washington that millennials are very active in politics. So we get involved in student groups, political campaigns, think tanks, grassroots efforts. And so we champion all sorts of causes. We champion freedom of speech on campuses. We take up gun rights. We take up the war on drugs. But surprisingly, we ignore the thing that affects us perhaps the most, and that's money. And so this is a problem because money is our basic unit of exchange. It affects us from the day-to-day in everything we do. In every interaction we have, every time we go to the store, every time we apply for a loan. Interest rates, the Federal Reserve policy really affects us. And the thing is, it's not only the short term. So in Venezuela, you see what unsound money does. You see your paycheck today is not worth the same thing tomorrow. And so the purchasing power of money really does matter to people. And you don't really see it until it's too late, like you see in Venezuela or like you saw in Greece recently. But also in the long term. So when you have to go up and pay off those interest rate or those student loans with more expensive dollars. And so we do have people that are talking about it, and they're sitting in this room right now, and that's a great thing. So we have Dr. Shelton over there, we have Larry White, Steve Lonergan put up this event, but the young people really aren't talking about monetary policy. But the thing is, what's good is we're good at making issues mainstream, and we're good at using social media. We're good at getting people to just talk about things. And so I think that young people should take an issue, but I don't think the point of this panel is going to be to give answers yet. I don't think millennials are there yet, but I think if we can get a call to action from millennials to start talking about monetary policy and say, all right, well, we don't really know what the solution is. Maybe a gold standard, maybe some kind of target. But if we say that discretion is what we don't want, and we want rules, and we want some kind of disciplined monetary system, I think that'd be a good place for millennials to start.
Thank you. Julie, as someone who is successful at reaching young people through social media and other outlets, how would you suggest we start the conversation with other millennials?
I'm actually going to disagree with you a little bit. I think the average young person cares more about monetary policy than the average older person. They just show it differently. As an example, a few years ago, I was at a conservative conference in Denver, and this was during the Occupy movement. Couple years ago, and the Occupy movement actually came to our hotel to talk to us, and the conservatives were just really nasty to the Occupy people. They said, get away, communists, you guys stink, you smell funny, put on deodorant, all this stuff. And I actually talked to the occupiers, and I had a film camera, and I said, why are you guys here? And they said, we want you to join us. So I was like, where are you guys going? And they said, the Federal Reserve. So while the conservatives were making fun of these occupiers who were mostly young, they had tattoos, they had dreadlocks, they were kind of dirty, to be honest with you, but they were going to the Federal Reserve. And I went with them, and it was awesome. They had in the Fed signs, they gave speeches, all the talking points that we've used today, they were using. And it just kind of was like, this is so partisan. Why can't we work together? And a lot of these people are liberal leaning, but they are against the Federal Reserve. They're against all this stuff that we are too. So I think if we actually put the partisanship aside and say, hey, we're with you. Also the Ron Paul movement, which I was involved in. I mean, have you ever seen a whole college stadium chanting in the Fed? Like, that's huge. But I'm going to say that some young people aren't with us. For example, I see a lot of young people supporting Bernie Sanders because they think he's for the little guy, he's anti-Wall Street, he's anti-corporate bailouts, and I think that could be us. Because if we're against the Fed, we're for the middle class, we're for the little guy. We don't want the corporate bailouts. So I hope our side comes out. Rand Paul has done a bit to do this, but I hope our side comes out with a candidate who's actually bold on monetary policy, who is actually willing to say, in the Fed, or at least audit it and talk about it, because I think young people, they want to be radical. And I think if we show them that we can be radical too about ending the Fed, I think we could actually reach these people, because there are young people who care about monetary policy. They may not go to conferences, but they'll go out in the street and protest the Fed.
So jumping off of that, Julie, and Jared and Johanness, feel free to jump in as well. What do you think our leaders in Washington should do to better engage young people in this discussion?
I think they could talk about it. I think that's the main thing. I hope it actually becomes part of the election cycle to actually, I wish Megyn Kelly would talk about, what do you think about the Federal Reserve? Because Ron Paul's not up there. There was no talk about the Federal Reserve the last debate. So we could actually make it a part of the conversation. I think that's a good start.
Yeah, and I think something politicians need to do is tie in the Fed to the giant Washington machine in general. Make people see that the Fed is no longer this independent, just a group of economists trying to work with a few levers on the economy, but rather they're intertwined into every day-to-day decisions. If we look at millennials right now, 2/3 view government as inefficient and wasteful. And if you can say what you want about millennials, but they do learn, because back when President Obama was elected, it was only 40%. So it's hopped up another 27% since then. But the other thing they can do is show that the Federal Reserve, they do a lot more than just monetary policy. As Mark was just talking about, they're deep into regulatory policy. And only 18% of millennials think that government regulations primarily protect public safety. So if we can point out all the things that the Federal Reserve is doing and how this works against young people's interest and is part of the Washington machine, I think that could be a way to get young people energized.
Johanness?
No, I think that's important. I think Jared's hitting on the head. I think the idea that young people need to realize that the Fed shouldn't be part of the Washington machine is important. We have to realize that monetary policy can't fix our fiscal issues. A lot of other things have to be done, and young people have to be the ones to bring that message to Washington, and I think we can definitely do that.
So Jared, you alluded to earlier about, it's no shock, no secret to anyone that the youth misery index has increased sharply under the Obama administration. So young people are not even purchasing cars, let alone homes. As we've seen at the same time, there's been a sharp rise in the student debt throughout the years of the Obama administration as well. What are some actions that the Fed can or should take, or if they should take, to help students who are coming into this bleak economic outlook as they are graduating?
All I know is whatever they're doing right now, it's not working. The unemployment rate for people 20 to 24 is still at 10%. What recovery is going on when you have 10% unemployment rate still? And teenagers, they're at 16%. So whatever the Fed's currently doing, no matter how much they claim they're focusing on unemployment or focusing on the human factors that Janet Yellen talks about, it's not working for young people. And I think people are starting to notice this on a wider scale.
Either of you have thoughts?
Yeah, I think the Fed needs to stop thinking it can fix those problems that Washington creates. It's not the Fed's role to start fixing our fiscal issues and fixing our economy. If it gives us a stable currency that we can have some kind of predictability with, that's going to do a lot better for the economy than having a Fed that's going to try to fix things through other tools and measures.
Yeah, I think they could get out of the way. I think the Fed's made things more unstable. It's created a boom and bust cycle where it's going up and down, and we don't know. As you were saying, like young people, they're not buying cars, they're not buying houses. I think it's a delay of adulthood. They're also not getting married. They're not having children because we can't afford it, because it's very hard to even get a job these days. Like I think back in the day, my parents always said, go to college, you'll get a good paying job no matter what. And I think that's a lot of the older mentality. But a lot of people went to college and they have nothing to show for it. They're back in their hometowns waitressing. And it's just basically we're kind of a lost generation here. And I think the Federal Reserve is definitely to blame for it.
Great. So It's true that young people are excited about ideas like entrepreneurship, but as we all know, because of the liberal academia that's pervasive throughout our nation, oftentimes students don't necessarily make the connection that it takes a free market for entrepreneurs to succeed. And so we've seen in recent years with interest rates at artificially low levels, do these actually benefit young people who might want to become entrepreneurs? Johanness, you want to start?
Not really.
Well,
Jared?
to elaborate on Johanness's answer that I would agree with wholeheartedly, I know young people, their professors taught them, don't worry, the Fed will just crank more money into the economy and everything will get going and businesses will start forming, we'll have the economic growth, there will be no unemployment. But that's really not how it works, and I think young people are realizing this. And I did a lot with millennial entrepreneurs talking to them, and why they've been referred to as the most entrepreneurial generation. Really, no one's following through on that dream. So they have these dreams. About 2/3 want to be their own boss one day, but yet only 3% of businesses are owned by someone under 30 right now. So people want to start businesses, but they see other parts, including monetary policy, standing in their way. And I'd like to just reemphasize what Johanness hit on earlier. It's not that the Federal Reserve should try to make up for our terrible regulatory structure, our tax policies, and our debt. It's that they need to stick with what they were actually supposed to do, because the Fed today, it'd be unrecognizable if people started drafting what it was going to look like back 100 years ago.
I don't think they're even learning about the Federal Reserve in most colleges, unless you're an economic major. I don't really think so. I was a political science major. I didn't hear the word Federal Reserve until my senior year when I took a public policy class. I think most people who have other majors probably had never heard of the Federal Reserve. I didn't hear about the Federal Reserve until I found out about Ron Paul. I never heard about it in high school. I never even was required to take an economics class in high school. And that's ridiculous to me. So no, I don't think the Federal Reserve should do anything. I think there's better ways to create more jobs. I think a lot of young people who want to be entrepreneurs, once they start doing that, they realize all these regulations and all these taxes are in the way, even licensing, just to do something simple like, braid hair, you have to have a license for it. To be a photographer, you have to have a license. Like, they have all these dreams, and then they're like, wow, the government's getting in my way. I think once you try to become an entrepreneur, like I've tried to recently, you realize, oh my gosh, there's all these regulations in my way.
Yeah, and I should point out with what our friends at the other counter to the left Fed conference are talking about, where they want the Federal Reserve to kind of pick up the tab for state and local governments. What they're ignoring is that these promises were made to Americans when young people weren't even old enough to vote or not even born yet. So when we're talking about now putting future economic growth at stake just to bail out irresponsible promises that were made that, again, young people never agreed to, I think it's perpetuating a system that we see over and over again in government, where politicians kick the can down the road or make promises they can't keep, and yet make young people shoulder the burdens.
Yeah, I think it's important too to note that for entrepreneurs, you have to be able to predict the future, or at least have some kind of outlook of what's going to happen tomorrow. And with an unstable dollar, when you don't know what the measure of your dollar is going to be tomorrow, it becomes hard. And the problem is the Fed doesn't even know what's going to happen tomorrow. In 2007, Ben Bernanke was saying that he was looking into more growth into 2008, and then the financial crisis happened. So even they can't predict it. I don't think young entrepreneurs should be able to either.
So looking into the future long term, what type of monetary policy would be beneficial for young people for years to come?
So right now we have a very active Fed. We have a Fed that doesn't have any sort of monetary policy plan in action, except what we need is a monetary policy that has rules. Like Dr. Shelton said earlier, there needs to be rules of the game, and we don't have them right now. We can't expect different countries to interact with each other without having some kind of rules in place. And so I think the people in this room would have a better idea what would be better, maybe like a gold standard. If you go back to NGP targeting, you have some kind of inflation rate targeting, which some countries do. All these things are better than the active Fed that tries to fix our economy through discretionary monetary policy by making it up as they go along. Anything but that, I think.
Yeah, I think what we need is a Fed that realizes its limits, and politicians who also realize the limits of a central bank. So rather than trying to ask them to do all these things, as Johanness said, follow just some sort of preset arrangement so that there's taken away discretion, which again leads to increased favoritism, which the young are losers, and greater political influence, which threatens long-term growth. So I'd say a Fed that's more realistic in what it can do rather than trying to think of how it can keep tinkering its formulas to make them finally work.
Yeah, I agree with everything that's been said. Maybe more radical in the Fed completely. But also, I want to say a lot of young people are looking into Bitcoin and other currencies. And I think over the past couple years, we've seen some come and go. But I think there's going to be even more. So they're saying we don't even need the Fed. We'll just create our own currency and use it, which is awesome.
So any final thoughts or takeaways? Let's start with Julie.
Takeaways, I think that there are young people who care about these issues. I don't think they're learning about it in their college classrooms or high school or anything like that. They're learning about it through the internet. They're learning about it on Facebook, Twitter, Reddit, all these kind of websites. There's more radical websites out there. They're actually learning about these ideas, so they aren't listening to their college professors. They're going to the internet and they're finding out all this information, which is great. I think there are young people who care about it, and I think we can reach those people. If we're radical, I think the young people are going to come aboard. And yeah, like I said about the currencies, I think the future is kind of bright because maybe we don't even need the Fed. We'll just do our own thing. It's kind of worrisome that the government's going to crack down on other currencies, which is kind of frightening. But I think, let's try it out.
Yeah, well, I think it's understandable that with an internationally uncompetitive corporate tax rate, over $1 trillion in costs from regulation each year, and booming entitlement spending, people are looking to the Federal Reserve to try to fix the economy. But Janet Yellen alone can't fix all the problems that millennials are facing. So what we need to do, again, is have a more realistic view of the Fed, but realize that what we want is something that restores, again, the faith in the dollar so that we can have a strong economy that will allow young people to reclaim their opportunity. And when we let the federal government, and especially the Federal Reserve, play favorites, the young and the economy as a whole are always going to end up being the losers.
Yeah, I think on paper, I think we've won the debate. I think it's clear the numbers show that what the Fed is doing now, the discretion is not good for us, for the economy. But I think that people don't really understand economics sometimes. We don't always understand economics. We don't understand the importance of them. But I think people are good, and they do know what's right and what's wrong, and that they each care about that. And that's why we need to take the debate into the morality of money. And we got to figure out how to show people that money is a moral matter. And in so doing, we can start winning the policy debate because it affects everyday relationships, everyday interactions, every contract you enter into. And so if we can win the moral high ground on money, I think we can win the debate, along with the sound economics we already have here in the issue.
May I ask just probe a little bit deeper into that? With all of, the PC movement and everything going on with political correctness, how do you think that we can win, this sort of moral debate?
I think it's been a debate that's been going on forever. In the Bible, it talks about dealing with honest weights and measures. It calls you to do that, and it says that God detests anyone who deals dishonestly. And that's in the Old Testament. It's been around for a while. Before the Founding Fathers started talking about money, before Enlightenment thinkers started talking about money, we had the Scholastics talking about money. So we had people in Spain, Escuela Salamanca, we had Thomas Aquinas talking about money and saying, there was one quote by Juan de Mariana that said, he said that minting lesser quality coins by the state, which is pretty much QE, is infamous systemic robbery. And so people have been talking about the moral issue for money for a long time. We just got to kind of update it and start talking about it again.
Thank you. You've been a fantastic audience. Please don't hesitate to get in touch with myself or visit YAF.org to find out more about Young America's Foundation. I hope you've all received a Ronald Reagan calendar here this weekend. Thank you.
Thank you.